Bitcoin traders. How are you guys? So, today we're gonna lay out the path that I could see potentially working out for Bitcoin while also having areas of potential support or resistance so you could lay out the areas to watch. Okay, so let's start. Let's get right into it. As we all know, Bitcoin is ranging, as you see in front of you. So this is the range highs, this is the range lows, and we're bouncing off the range lows as mentioned in my previous video that we're bouncing off the range lows. This level is not really the range high, but it's like the equilibrium of the range. So basically, at this area, we find some sort of balance, so we reject from it. So usually when we reject from it, we reject to the range lows as you see in front of you here. The thing is, in order for this path to turn into reality, we need something like this. We need to accept into this imbalance, into this resistance and range to form more energy and go higher. Okay, so we need to go higher in order to touch the range highs area because this range is from here to there. As you see in front of you, even if I put in my Fibonacci tool all the way from here to there, if you see this, this point has been a pivot for us to completely reject from. Reject. Look at here. We tested it, rejected. Retested it, rejected. Retested it, rejected. This time we need to reclaim above it if we want to go to the range highs, if you want to have something like that to test the one Fibonacci tool area. And uh, with you, to be honest, if we want to have something like this, we shouldn't be losing the zero point 0.5 Fibonacci tool. That's as a starter, let alone the 50 daily EMA and the bands. So if you have any pullback, we should pull back into the 50 EMA and get supported. We shouldn't lose 64K if we're going to continue higher like this. Okay, so the things that matter here is that even if we reject initially, like right now, it's completely fine to reject initially. This is a resistance area. It's not supposed to flip from the first try. However, you watch the pullback and you see how deep it goes. If we're holding the 50 daily EMA and then we completely stay above the zero point 0.5 and we stay above 64K as a whole, that's bullish sign for continuation and breaking above this level. Okay. However, if we lose the 50 daily EMA and we lose the bands, that means we're going to go back where we started from. Because as you see, this is impulsive move, and the impulsive move tend to revert quickly if the support is lost. So by now, the 50 daily EMA, the bands should be flipped into support, and now any pullback into them should hold to have something like this and to go higher to test the range highs like this. The target from here, if we reclaim this, of course, initially the target is flipping 65K and 65.5K. After that, after we reclaim that and flip it into support from resistance, our next target is 67 at 66.5. Okay. Once we go there, we got to see what's going to happen. I'm going to be updating you with different video. But for now, the thing that you need to pay attention to, if we're going to have something like this, we need to flip this zone first. We need to reclaim it and flip it into support from resistance and then go all the way up there to retest the range highs. Okay. The second path is that if we fail to hold the 50 daily and we fail to hold the bands, we are going to go to where we started from because as you see in here, the impulsive nature that we had is basically we have a gap in here, of course, because of this gap up that we had. And this is very easy to fail if we lose support. So the faster we went, the faster we're going to revert if we lose the support itself, which is the 50 daily and the bands itself. Okay, so 64K is the level that matters, or else we will revert all of that impulsive move that we had. Okay, something like this. Look, impulsive move reverted all the way higher. If this is impulsive move does not get supported with any pullback, we can revert it all the way to the range lows. Now, let me tell you why the range that you see in front of you matters. If we delete all of that, and then we go to the weekly chart, you will see this is the only range that's literally taken us from going to 70K and plus. So this is the MSB that we need, and this is the all-time high of the the all-time high of the previous cycle. So it's very important level. all-time high of previous cycle, MSB for us to continue bullish continuation and to reverse to the upside. So once we reclaim this level, once we reclaim 65.7K with weekly candle close, flipping it into support in case of any pullback, that's very bullish for us to go all the way to test first 63K and 73K and 78K. So there is not much resistance left here anyway. The thing is, we just need to flip this line. We need to flip the blue line. After we flip in it, it's going to be so easy for us to fill the gap in here from the impulsive weekly candle that we had on Monday in June, and then we're gonna go all the way to 70 and 73K once we flip this line. And this is why this line is important. It's not only the MSB, it's not only the structural level, it's also the previous cycle all-time high. So we need to flip it in order to go higher. And I will, of course, update you in the upcoming video how it goes. I'm not going to be looking for a very, very long-term picture here. I'm just giving you an analysis that will help you this week. And in the upcoming week, I'll give you another video to follow up on that one to see how the price developed. That's it. Have a nice day. Enjoy. Trade safely. If you want to see my analysis, if you want to get closer to me on the daily basis and see my analysis every single day, once in the morning and once in the evening, join my Telegram channel completely for free. You will find the link in my description and in my first comment. Thank you very much. Have a nice day.